Hey everyone, I have a good friend of mine and a lender who's here with me today, John Harrison, and I get people that I work with on the buyer's side. They're looking to buy real estate, land or residential or commercial, whatever it is, that have interesting incomes. Some of them will work just a few months of the year, anywhere from 3 months to 7 to 9 months of the year. And so they're concerned about getting a loan to purchase a property. And a lot of them have good income, but they're just in their mind, their paradigm is that, well, I'm not going to be able to get a good loan because I don't have a normal job. I'm only working a few months out of the year. So I just want to have John hit this, and I may interrupt you and as you're explaining, and just tell you a couple options maybe, or some of the things to maybe change your paradigm of the opportunity to buy a property, to buy a home and get you in a home right now or sometime in the future, no matter what your income and how many months of the year that you work. So anyway, John, just throw out a few things to help us.
Just so people know, I mean, we deal with people who are landscapers who work 9 months out of the year. I've got some people who specialize where they're in summer sales, especially here in Utah, where they're out doing solar or insecticide or whatever it is, and they work 4 or 5 months of the year and then they're back at school. The great thing is we have different programs, and what they're going to look at depending on the program is there are bank statement programs where you can look at bank statements. They'll just take an average of the deposits for a year or 24 months if you want a little better rate. There's also programs where we can take your tax returns and we will do an average of 1 or 2 years depending on what the synopsis is that we get when we run it through our system for our desktop underwriter. For an approval on a loan, it'll tell us 1 or 2 years. And then we also have seasonal, where we can just do an explanation letter. We can show that your pay stubs every year for 3 months of the year or 6 months of the year, 8 months of the year, and we're able to then say, hey, let's just average that out over a year. And as long as we have consistency for at least 2 years of that job, then we're able to do that as an average, and you can get a regular loan, full dot.
You didn't bring up credit score. How does credit score come into that with somebody that
and it just depends on the credit score, is what they're trying to accomplish. So on a regular QM product, which is a qualified mortgage with a government-backed product, where we do tax returns, a seasonal average with a note saying what it is, those are regular rates. You can do a 640 credit score.
640.
640.
What is the average credit score?
Most people are around a 680. It's pretty average. Anything over 700 is really what you like. But I mean, we've got people, down to the 640, 650s. It's fine. And then, there's some other products for loans that have credit scores lower than that. It's just those things we have to look at the different scenario of what you're doing, what your income situation is, and then we can put it together and figure out which ones work for you so you can pick which one's the best one.
Okay, excellent. Okay, anything else then? So credit score does matter. I think it's a lot less of a impact than what people think.
Yeah. I mean, a lot of people are like, I don't really know, my score's not that great. But a lot of times, we have products down to a 580 credit score. It just depends on what the computer says when we run it through the system. But the nice thing is there are a lot of products that you just don't know about that will help you get into a home.
Okay. Now going back to, you said just a bank statement, your tax return, and average it out.
Yep.
It seems like pretty logical to think, okay, yeah.
They're make sense loans is what we call them.
Make sense loans.
Yeah.
Okay.
Yeah.
Okay, so if somebody starts down that path and they start working with you, is it something they're going to have to be like, oh man, this is going to be a month, 2 months, 3 months?
And I can tell them right up front, usually within a matter of a couple days. Most time, if it's a qualified mortgage, then usually a day. If not, it might be 2-3 days depending on the situation of their income. But we can tell them, hey, here's what you can do, right? If you have a situation where we need to have you work on your credit or get some more credit, you don't have enough depth of credit, we'll let you know up front, so you'll know whether it's going to be a month, 6 months, a year, so you can kind of plan ahead, because everybody's a little bit different, but we always tell people, go and talk to one of us as a loan officer at least 6 months before you're ready to buy, so that you can make sure when you're ready to buy that you actually qualify to buy.
Hey, now, he just said, go and talk to him 6 months before you're ready to buy. Most people, when I start showing them properties, they're like, well, I haven't talked to anybody yet.
That happens a lot.
One other thing is, most of these people are going to have a business, and then their business is going to give them a 1099.
Yeah, you're gonna pay.
How can that work? Because my 1099, I want to keep pretty low.
Yeah, and we talked about today, there are 1099 programs where they'll even look at 1 year 1099 without your deductions. But in a lot of cases, too, is you don't realize that when you're doing your taxes and you're a self-employed person, there's lots of different loans, but we can even look at putting all the appreciation, which is where most of the people take their deductions from. You can put all the appreciation back into income. So there's quite a few times where your income with the appreciation put back in will help you qualify for the loan, and you won't need to do anything else. But if not, we have a lot of different loans and programs specifically for self-employed borrowers, as bank statement loans, investor loans, primary residence loans, where you can do alternative credit items.
Okay, excellent. Okay, you guys, so you've got a ton of options. So I know enough to be dangerous and to point you towards a lender who can get you information and get you in a home. So get a hold of me if you're looking to buy something either around the corner or in a few months or a few years down the road. And if necessary, we'll connect you with John here and he'll get you to some more information. So thanks, guys. Appreciate your time.
Appreciate it.